Exercise 11.9 is another basic cash flow problem. And remember the equation we talked about in class, that cash varies or changes directly with the change in liabilities, varies directly with the change in equity, and varies inversely in the opposite direction in the change of non-cash assets. We also said that cash assets are very limited. There are cash, and that's pretty much it. So let's take a look at this and see what's going on here. This is 11.9 and this is Software Distributors Inc. and they report net income of $65,000. Well, that's where we start with their net income. Depreciation expense. Remember, depreciation is a non-cash expense. That's why we like it so much. It reduces our income, but doesn't reduce our cash. So we pay less taxes, but we don't have to give up the cash. But it's a non-cash event, so we have to add that back. So we had $15,000 in depreciation expense, so we have to add that back. Now, we had a loss on the sale of land. It's a real loss, and it probably is cash. It just doesn't belong in the operating section. It belongs down below in the investing section. So we'll add that loss back here, but remember to subtract it from the investing section. So we'll add back that $6,000. Accounts receivable went down. Think about that. That means that we collected more money than sales for this year. In other words, we collected some money that people owed us from prior periods. So our accounts receivable went down by how much? Let me take a look. $28,000. So we have to add that back. Our inventory went down. I need you to think about that this way. When you sell inventory, what do you get? Cash. So the inventory goes down, cash has to go up. And in this problem, they tell us that was $37,000. And accounts payable, again, I'll refer you up to here. Accounts payable is a liability. So cash and it travel in the same direction. So if liability goes up, cash goes up. If liability goes down, cash goes down. They tell us our accounts payable went up. So we know our cash is going to go up, and that's $45,000. So we started with $65,000 in net income, but in actuality, our cash from operations totals $196,000. So it's $65,000 plus depreciation, plus the loss, but we'll take that out down below in investing, plus the decrease in accounts receivable, plus the decrease in inventory, minus the increase in, or plus the increase in accounts payable, because accounts payable goes in the same direction.